Talk to me, traders. Talk to me. Who caught that move in US30 today? Anyway, I'm Antoine Farrar. Welcome to another episode with Digital Goatz Academy. If you're tuning in today, you know today is our market forecast. But man, I had to start off the call with a little bit of excitement because US30 has been on a bullish tear, not stopping. I've been surprised that the market has been like pumping up so violently. Like, god damn, yo. Excuse my language, yo. Anyway, if you're tuning into this call, you know to hit that like button, comment, and subscribe. But man, US30 has been crazy. So today is our market forecast, traders. So basically, for our market forecast, we basically predict what may be transpiring in the market throughout that week. But man, I've never seen a Monday and Tuesday provide so much for us, especially when you find yourself on the right side of the market. So if you've been following my channel, you know I primarily discuss indices. We do have another trader within Digital Goats that is going to be presenting Forex pairs to you all. So definitely stay tuned for that. He'll definitely be presenting himself very soon. Excuse me, soon. So yeah, let's go ahead and get into the trading session. So US30, not too much to discuss about it except opportunities to jump back in. So since Monday, well, basically since last week, let's actually talk about last week a little bit. If you watched the weekly review, you know what our bias was um, as it pertains to indices. So last week on Friday, the market actually ended bullish. In our experience throughout this entire year, especially since we're now on the bull side, the market ending bullish on a Friday has normally spelled that it's going to continue, especially as aggressive as it was on Friday. Like that was a bullish engulfing. So we should expect the market to continue pushing in that direction, correct? Now, as it opened up on Sunday, it gapped up slightly. Nothing major popped up. And then towards opening bell the following day, so on Monday, pumped the market up, but then drove it down to an area we did identify. This support structure right here. It didn't come all the way back into that zone, but close enough, right? In the neighborhood. So if you look, this was an imbalanced candle and the market just shot up from there. So today, well, basically this was our traction from Monday. So we caught that. And then today going in, well, basically from what was this? The previous the previous day. So this was 5 o'clock close, wasn't it? Yeah, this was 5 o'clock close all the way into London. We didn't have like the major spike until opening bell. So all the way into basically the open of New York session. So all the way from all the way from Sydney, Tokyo, with the open of Sydney, all the way to the open of New York that the market had consolidated, and then from there got extremely bullish. We didn't see this until opening bell, and even then, I know it looks like this now, but the market did not play out as clearly as we see it now that the data is formed. You know what I'm saying? It was manipulating a lot. If you break it down on the smaller time frames, well, it's not really giving justice. But in between these candles, the market would spike up, push down. It doesn't seem like that now, but that's exactly what was going on. But every time it pushed down, the market just popped back up. So you might as well call those short-term pullbacks. So now that we're here, which I am surprised how aggressive like the market has been to the upside as far as like US30. And I mean, that's kind of like an understatement because it's like it's US30, but goddamn, you know what I'm saying? Like goddamn, especially when you're on the right side of the market. So now that we're here, which we did identify this as previous resistance, there could be two things that could happen. What I'm pretty much predicting for the market, like we could see it push up into this territory and then fall down, or we could start to see it fall down from there. Either way, some form of pullback needs to happen. So it's like, don't get manipulated by being like, oh, what I think it's going to do, it is going to continue pushing up. So I think probably from Sydney into like what am I trying to say? Why is it London? I'm sorry. From Sydney into London probably will be buy opportunities, and then going into New York, the market will probably sell off like nobody's mother, right? So I'm thinking in this territory, regardless of what the market does, as far as like buy up or sell off, like immediately. I'm looking for basically this territory over here to start looking for buys, but as we know, this is US 30. As we know, this is US 30, and it could basically pull back as strong as it wants to. So it can come all the way back. The next area that I was really eyeing is like this territory right here, but I'm not sure if we'll come all the way back to this floor. No, I doubt that. I actually doubt that. I'm sorry, I wasn't thinking that. No, that's very possible. Maybe back into this ceiling. So I was really aiming for this consolidation right here. We know that indices are attracted to consolidation. So really, if price actually drops lower than this, then my next guess would basically be, or my next entry would be this ceiling. That would make perfect sense. Now, here's the thing: US 30 since Monday has already traveled 10,000 pips. So we know when the market travels, like normally that happens in like a week time frame. So, you do the math, okay, it's happening like that in a week's time frame. Is there going to be a possibility of a pullback? We don't want to try to predict a pullback. We just want to identify an area where the market could pull back, if that makes sense, right? So knowing that it traveled 10,000 pips, I know that there needs to be some type of correction. You know what I'm saying? Something has to give within the market, whether it's like a quarter of that, half of that, or 100%. It going like 10,000 pips, like in basically 2 days, I'm probably looking close to a quarter or half because the momentum to the upside is like very strong. So I don't think that we're pushing back down to these lower territories. I think this is basically the buy move, and anywhere in this like area is where like the market is going to start buying back up from. We have our break because we're on Tuesday. We know that Wednesday tends to be more of like a trending day. So depending on what the market does, it may happen either very fast or it may actually push the market down to where we need it to. Going into Thursday, Friday, the market pushes back up. Today was Veterans Day. So, also, happy Veterans Day to all the veterans out there. Thank you for your service for sure. But yeah, I just wanted to. I actually was surprised that the market did react that way. You know what I'm saying? Especially with it being one of the days that the banks are normally closed. So especially when it pertains to indices, that it was so bullish. Like I was actually surprised. But I mean, for me, I just kept buying up. I predicted the buy, but I didn't predict the buy would be so violent. Or my forecast was for the market to buy back up. But now that we do have the buy and we're at a level of resistance that we've already identified. We didn't go all the way up there, but it stopped short of it and started pulling back. So what I'm looking at is like obviously you wouldn't want to buy here. You would want to see how far the market pulls back. But this is the area, this is the first area I'm looking for the market to pull back. So it could do one of those shallow pullbacks, reach up to like 49, because you got to think about like the pip count that goes into the market. Normally, even if the market is violent, it won't like go beyond like, let's use like when the market like sold off during the tariffs in 1 week. We want to see like in 1 week's time. Oh man. So in 1 week's time, the market 17,000 pips. You know what I'm saying? And obviously we know the buy is longer than the sell. So maybe you say you double that. We're currently in this week. We're already up 10,000 pips. We see that on the sell side, it could go a maximum of like 17,000, maybe even more. That's around 48,750. So that's closer to 20,000 pips, right? Let's say the market decides to go 20,000 pips. Well, this would be our target. This would be our new entry if it did continue. But using basically this past information, I could see that that's the threshold unless the market breaks that, if that makes sense. So I do apply that logic into when I'm looking at, okay, how many pips did the market move for this entire week? So I kind of know what my play or my ideas need to be going into next week, if that makes sense. So I'm using this information now because wow, the market moved fucking 10,000 pips in 2 days. That's kind of insane, yo. To think that it won't try to produce some type of manipulation by pulling back very strong, you're kind of crazy to think that that won't happen. Now, I'll say that it doesn't happen because now there's a lot of fear driven into the market. We know that this area that we broke out of is the area that the market will position itself back. But again, when you factor into that pip count, I know that the threshold that I saw on the selling side is only 17,000 pips, right, for US 30. So, okay, on the buy side, I know it could possibly be longer, but I haven't seen that yet. You know what I'm saying? So it's like 10,000 pips is a threshold, anywhere from 10,000 to 17,000. We just need 7,000 more pips to go. That's not that far from here. You know what I'm saying? When you're looking at how the momentum of US 30 is going. So, what I'm getting at in that sequence, you should expect some type of correction, some type of pullback. 10,000, we want to see how the market is going to react. We don't know if it's going to try to continue or if it's going to try to push down. I would guess to think that I want to see if it at least tries to pull down, pull back or push down in order to buy back up in another area. So I could definitely see it coming back. Yeah, I could definitely see it coming back here because to me, this definitely looks like the trap. Um, and coming back to this gap over here, that would make perfect sense doing it on the opposite side. So I could definitely see it coming back to 47K, like 100 flat. We'll have to basically, wait for the market to position itself. But if that's the case, let's look at what it looks like on the 4 hour. Because what I want to do is get a pip count right there, and that would put us back. And coming back to this candle. What's that right there? Our favorite structure to identify. That we know that indices are definitely attracted to. We say this on damn near every call. Consolidation, right? Mm, Consolidation right there. So if the market returned back to this area, not to mention just because we haven't had no like a strong pullback, and we needed the body of this candle to be tested somehow. More than likely, I could see the pullback positioning us all the way back down here. It's kind of crazy to say, but we're at resistance right now. So we have to respect that the market will treat this as resistance. You know what I'm saying? This is only like truly the second time we've been up this high. So the market could sell off. It could, be kind of stagnant up here. We could start to range from here based off of these highs in the market, but we just have to wait and see how it reacts once the market opens back up at 6. But again, if it gaps up, I'm thinking that it'll push up and then drive the market down into like from London, and then we may have the opportunity within Wednesday and then Thursday to see it push all the way back down here. Now, my reasoning for that is because one, um, just how aggressively bullish this market was on such an odd day for the market to like fly as high as it did. Like that's very odd to me. So as a trader, that should just put a red flag in your head that don't try to predict it, but I wouldn't be trying to buy from here neither, unless it showed you something else. Two is that I've told you before, if you've been on the calls, if you've been on the sessions, that US30 kind of mimics, or S&P and US30 kind of mimic each other, to kind of reflect each other. S&P created a gap that it never fully filled, right? So me seeing that it created that gap, I expect that the market is going to try to fill that. And what better day to do it after the market just got dumbass bullish today for US 30. Now, looking at S&P, we can see that it took a little bit longer for it to get bullish today, and you see how it produced this kind of, look how it opened up for this candle right here. Remember, it started looking funny to you, like pay attention to that. That's not just like visuals, like a glitch in the system. You know what I'm saying? I mean, even if it is a glitch in the system, you should pay attention to it, right? So, when the market opens up and produces these weird looking candles, like that doesn't look like a proper way for the market to produce a candle on the opposite side that's saying that, okay, I did test a percentage of this candle, now I'm pushing up. It looked like it just opened up, right? Because there's no pullback here, even if we zoom in on it. You don't even see like a wick. It just opened up and then it opened up a little bit below it. So like what did it do? Did it gap down or something? No, that wasn't the gap that I was looking at. I was looking at this gap for S&P. S&P produced a gap, what is it, Sunday? Yeah, Sunday that the market actually never came back to fill just like it did US 30. US 30 it definitely did. But S&P it didn't do it. Now it's like I would love to say that yeah, man, the market is about to just go stupid from here. You know what I'm saying? But it's like these are normally the times where the market gets everybody comfortable and bring the craziest bear candle, or if we were selling the craziest bull candle on the opposite side to sweep out anybody that's still been buying high. You know what I'm saying? Get enough momentum for itself or get enough revenue equity for itself to push up. So that's just what I'm not predicting that, but it's like I'm in preparation to see how the market reacts tomorrow going into Wednesday. Because we had 2 days that the market was aggressively bullish. No correction whatsoever, producing these candles that you normally want to see a pullback on. A lot of imbalance in the market. So that's what we should expect like for like US 30 and definitely S&P. S&P has seen a lot cleaner because of this pullback right here. But I think that now that we're in this area, this is a trap because look where it let me show y'all. Look where it started rejecting. If you look at the weekly review, I think we talked about this. I have it labeled. It's a gap right here. It's very small. It's very small, but there's a gap right there in the market, right? So look how the market actually rejected that slightly. Well, S&P. See, it rejected that. That's why I drew that line. You can't barely see it. It's very small, but it's odd that S&P rejected where the gap is, even though it was small, around this same area. Normally, when we see a rejection of a gap, you normally have like the market running away from that gap a little bit stronger than what you anticipated. We have a bunch of gaps up here. We had that gap right there. But for this, since we're on the buying side, this would be the market testing this gap after it, cleared all these cells out. So we should expect the market try to do something, at least try to come back and either collect this gap or at least try to push the market down to either create support right here or a lower level. Something to that effect, because I mean, I'm not really paying attention all the way to this gap for S&P because I'm more reliant on my broker, but I think even in my broker, it didn't collect that gap. So I'm definitely keeping my eye. Like one, in the market, we're supposed to have another rate. Not this month. No, in December. In December. I don't think this month. Yeah, December. I was thinking of last month. Anyway, we're supposed to have another rate cut. So obviously, we've already seen that when you're supposed to have a rate cut, what is the market normally doing? The market is normally still continuously buying up because the reason why there's a rate cut being triggered by the Federal Reserve is because it's basically out of control right now. You know what I'm saying? It's out of control to the upside. If we needed a rate hike, it would have been out of control to the downside. You know what I'm saying? And I don't think you normally see that in indices. But of course, you want to see a rate cut to correct the market so it doesn't throw the market out of whack and start making people who need to be rich rich and start making all the rich people broke. I don't see something like that happen, but kind of picture it, right? So with us expecting that the market should want to try to pull back to this area, we'll probably see that closer towards opening bell after the market maybe spikes up. Any buy up, I'm not like looking at it to like, I think that it's a trap. I think that any buy up tomorrow will be basically a trap unless it just goes crazy. You know what I'm saying? And then you would have to assess that as a trader. But I think that we're going to be in preparation for a pullback, and then maybe just like last Friday, buy up again or buy up on Thursday. It just depends on how aggressive like the sell tries to force the market down. But that's what I would expect for S&P. I would look for basically this area. It never tested any of that imbalance like US30 did. So S&P could, in theory, come down a little bit stronger. Let's look at where we're at from Sunday. 1,000 pips. Normally S&P, yeah, 1,000 pips. Like that's pretty fast for 2 days, but it's not unheard of. If it would have went like 2,000 pips, then I would have been like, oh snap. Um, but the same thing, you see how it's kind of reflecting US 30. US 30 went 10,000, S&P went 1,000 just because of the price range, right? I hope I didn't say 10,000 for S&P. I meant 1,000 if I did say 10,000. So if you're looking on a pullback, I obviously would target this imbalance candle. I think it's going to sweep that gap to fully fill it in. And then we probably would just look at the top of this consolidation area, which from this general area that the market possibly could sell off from. Yeah, you can see a 1400 dip. That would make sense, to me because for the weekly candle, it would look like the market didn't move like that. You know what I'm saying? Once it bought back up, it would look like the market only moved like probably like 1,000 pips for the whole week. If once you look at the data at the end of the week, but it having a correction that's 1,400. You know what I'm saying? After going, what did we say from the open? 1,100. You know what I'm saying? Like that makes sense to me. So that's what I'm looking for. Just because I was already skeptical about this area identified for a possible sell position. Now I'm not looking for sell, so I'm okay with ignoring like the drop. But these would be the areas that I would target for the buy. Don't put yourself in jeopardy by trying to chase a sell. Now, if you do take the sell, don't try to stay in it because tomorrow going into Thursday, the market could try to buy up strong or sell and then buy back up on the opposite side. I'm gonna do my best to make sure I wait for the buy opportunities, especially when we're looking at US 30 too. So that's pretty much my analysis for this week. I will add in that I do think that the dollar is about to get bullish again. I think we're about to hit back. They were discussing inflation on Bloomberg, which has still been here, but it's like I believe that we're at a stable position for the dollar. So I believe that even with all the negative data reports that they've been having, that we're at what they call stagflation, where it's like you're kind of in inflation, but you're not. You know what I'm saying? At the same time, but to me, it's still providing more stability than what we've seen before within the DXY and the dollar at its whole. So I do think that currency pairs against the dollar, as long as that currency pair attached to it, will be bullish. But obviously, you'll have to jump in and find your entry from there, which means currency pairs against the dollar, if we are bullish, should be brought down. I mean, that's easy enough as it is. Well, let me see. Yeah, that was it that I wanted to discuss. Oh, oil. I think oil's about to be on the tear. I'm actually more primarily invested in it. And as you can see, this was a gap down here, or this wasn't a gap. This was like I mean, you might as well say it was a gap, but this is like one of those candles that like broke and didn't have any data at the bottom. I identified it because it was definitely a candle by itself on a smaller time frame. You can see that oil shot all the way up here, brought the market down, and tested that area finally, and now we're pushing up. So I do think that this is actually support for U.S. oil, and this will give you opportunity to start investing in oil companies. Now, that's just me, you know what I'm saying? Obviously, still do your own research when it comes to the investing side. But as far as like trading, yeah, I'm looking at the market to straight up be buys from here. I mean, it just makes sense. Oil, indices. So if you just look at the stock market's going back up. All of that stuff just looks like corrections in the market. Hell, once we get a final correction, I even look for cryptocurrency to start being bullish again. I definitely took advantage of that this past weekend. But that's all I got for you traders today. I'll catch y'all on the next video, which will be our live trading for my personal community. Everybody else on YouTube, I will see you on live trading on Thursday. I hope everybody, one, had a successful trading day. Um, and I hope y'all have nothing but prosperity and abundance in this market. Make sure you pay attention to what's going on, and it's like you don't find yourself buying low. I mean selling high. I mean, yeah, buying high and selling low. That's all I got. I'm Antoine Farrar signing out. Peace.